175 now is what Goldman thinks. What's your call for a 10-year?
Not going to happen.
Not going to tell them why.
First off, I have sensed in the last several weeks, as gold has rallied, not coincidentally, our clients are starting to get very uncomfortable with the risk reward presented by the cost of long-term or the receipts, if you're the German government, of long-term money. It's really, it's a head scratcher. You know, talk of Austria potentially issuing a 100-year bond at 1.2%. It just doesn't make sense from a risk-reward perspective. And the bond market is telling you that, you know, there is the potential for this global recession that we alluded to a few moments ago, which again reinforces why all these events are so important. But from our point of view, and we saw this at the end of the first quarter and the beginning of the second quarter, there's likely to be a reset higher. And we actually started seeing it in the stock market yesterday in particular, where cyclical shares rallied and defensive shares, really, there was a lot of profit taking. That's the market telling you that interest rates on the long end, particularly if the Fed's successful in stoking inflation expectations, move higher.
Well, and that's my question. Is inflation coming back?
The Fed would certainly hope that it is. You know, you may not get an overshoot of 2%, but gold is telling you that it is a possibility. Obviously, the oil market has been very strongly bid. And from our point of view, if you get a good deal or a handshake or, again, whatever, some form of happiness this weekend, the first reaction is likely to be higher long-term yields Monday morning.
But it feels like the problem is exemplified in this chart, and that's negative yielding debt versus gold. When you have almost $13 trillion of negative yielding debt, it's like, how can you not then buy gold? How can you not go buy bonds that are yielding something, even if it's just 1.2%?
And how can you not buy stocks, defensive stocks in particular, that are yielding, you know, 2%, 3%, what have you? And that has been where the market has been putting its assets. And for us, again, this whole notion, you're getting to the point. It's one of those things that the old saying is, you know, if something that doesn't make sense continues, at some point it is going to stop. It's hard to say when that's going to happen. But there's a sense it could.